has advised on a raft of multi-billion-dollar deals covering everything from pharmaceuticals to steel companies and even luxury goods. He's Scott Simpson, partner for cross-border mergers and acquisitions at Arps, and he joins me now to discuss the latest M&A trends. Scott, thank you so much for coming in. There does seem to be some kind of a cyclical way that when we come out of a financial crisis, M&A is spurred on. Are we seeing the same thing here, and what are main drivers?
We are seeing a significant pickup in M&A, and consistent with prior cycles, we're seeing sort of the first start of the wave are the strategics, the corporates who move. They have the benefit of a strong balance sheet, since many of them have been restructuring during the financial crisis. They have access to financing perhaps before private equity has that access, and they also have the ability to issue paper as consideration. So they're the first movers, and we're seeing that play out in this particular period of time.
Are we seeing more private equity? Because we speak to private equity CEOs quite a lot, and actually last year they were saying, oh, by the end of the year we'll do 4 or 5 big deals, and a lot of these deals haven't happened. Do you see it as a big factor, the fact that actually, well, they hope to be back in the game?
I think that private equity is back. We are seeing private equity participate both as buyers, opportunistic buyers, as well as sellers of some of their portfolio companies. It tends to be the smaller businesses right now, smaller transactions. I think we'll see them play in some of the bigger transactions as well. But for the time being, they're just emerging. I think strategics still have a window of opportunity to participate without as much competition from private equity.
Now, Scott, I know you can't actually talk about specifics because you advise a lot of the deals, but we do seem to have a lot of luxury activity. Again, is this driven just because there are jewels in the crowns there that the big guys want, or does it have to do with balance sheets? I mean, what drives M&A in certain sectors?
I think we're seeing playing out, including in the luxury sector, certain corporates who are consolidators, and they have an opportunity in particular at this moment in time: strong balance sheet, access to financing, the ability to issue paper. All of those factors are being used by the consolidators. We're also seeing a significant opportunity to enter the emerging markets for growth.
And that's the key. It's the emerging markets that's driving a lot of these M&A.
Absolutely, absolutely. But maybe not for the first time, but in a significant way, we are seeing corporates look to the emerging markets for growth, but we're also seeing big emerging market players going outbound. So we have China entering the European markets as an acquirer. We have Brazilian-based large companies acting as acquirers, and this is creating a dynamic which is quite powerful.
How much is the dynamic between emerging market companies? China coming into Europe, yes, Europe going into China, but what about the Chinese buying the Chinese?
Less consolidation within China. Right now, I think it's those companies that want to access China and the Asian markets going into Asia, and it's China outbound, looking for natural resources, looking for their own growth through international acquisitions.
Scott, thank you so much. Scott Simpson there.